For the past few years, the market conversation has been all about caution, high interest rates, and tight spending. But right now, the global financial system is at a genuine watershed moment. 2026 is shaping up to be something completely different. Let's break down exactly why this year is so critical.
What we are looking at is a nearly $4 trillion wave of what you might call hard tech infrastructure. We're talking about everything from orbital logistics to artificial general intelligence, all getting ready to flood the public markets. This could be one of the largest single-year waves of new listings in history.
Now, make no mistake, this isn't just another tech cycle. This is what we're calling the Great Frontier Reopening. It's a fundamental shift in the entire global economy. For anyone investing, this means the rules that worked for the last decade are basically being rewritten in real time. We're seeing capital move away from digital services and into foundational physical hardware.
And right at the heart of this huge transformation are three of the most valuable private companies in the world. Each one of them is gearing up for a truly historic public debut. Let's dig into the numbers.
Okay, first up, SpaceX. With a projected valuation of an incredible $1.5 trillion, well, this isn't just about rockets anymore. Starlink has turned into a high-margin global utility, and it's already got over 8.5 million subscribers. Then you have OpenAI, and they're targeting a $1 trillion listing. Why? To fund Project Stargate, their plan to build the most advanced compute clusters the world has ever seen. And finally, there's Anthropic, valued at $350 billion. They've really carved out a niche, grabbing 32% of the enterprise market by positioning themselves as the safety-first AI.
So this quote, "The asset-light era is over," really signals the critical shift that's happening underneath all of this. That era of pure software, it's done. These companies have burn rates you'd expect to see from heavy industrial giants. They're turning to the public markets for a simple reason. Private capital just can't sustain their massive and growing need for physical infrastructure anymore.
So you might be asking, why is all of this happening right now? Well, the catalyst is a massive injection of fiscal stimulus.
You just have to look at the One Big Beautiful Bill Act, or the OBBBA. It was passed back in July of 2025, but its real economic impact is just now hitting the bank accounts of U.S. consumers, right here in the first quarter of 2026.
And to really get a sense of the scale here, just think about this. Because the bill changed how deductions work, U.S. tax refunds are projected to jump by a staggering 44%. Now that translates to roughly $150 billion in fresh liquidity pouring into the economy right as these monster IPOs are about to launch.
But, of course, this stimulus comes with a very clear risk. The Congressional Budget Office is warning of a sugar high for GDP. All this new money creates inflationary pressure, which could force the Federal Reserve to keep interest rates higher for longer. And that, in turn, could put a real cap on the valuations of these long-duration tech assets.
And this brings us right to our next point. We're watching the creation of a whole new industrial paradigm. It's a fundamental change in what the market actually values.
You see, the old playbook was all asset light. Think software as a service, low capital expenditures, purely digital stuff. The new reality? It's asset heavy. It's all about physical infrastructure, incredibly high cash burn rates to build that infrastructure, and a laser focus on hardware. This is nothing less than an AI industrial revolution, and it's built on silicon, copper, and energy.
But there is a huge physical constraint that's threatening this entire movement. We call it the energy wall. The demand for compute has become so intense that data centers on the ground are pushing the global power grid to its absolute breaking point. A new solution is needed, and fast. And that solution is what's being called orbital offloading. By actually moving data centers into space, think of SpaceX's rumored Starcloud project. Companies can get access to unlimited solar power and use the cold vacuum of space for passive cooling. So here's the crucial point. SpaceX is no longer just a transportation company. It's on a path to becoming the landlord of extraterrestrial real estate for the world's most valuable data.
So, to operate in this new world, investors have to understand a completely new market framework, one that's defined by incredible speed and, frankly, geopolitical friction.
We're calling this the NAVI environment. It's nonlinear, accelerated, volatile, and interconnected. In 2026, the main driver of market returns isn't just earnings per share anymore. It's geopolitical strategy.
And this creates all sorts of new risks. For one, we're seeing the rise of the splinter net, where a company like Anthropic might stop selling to certain foreign nations. Now, this shrinks their total available market, but it massively increases their strategic value to, say, Western defense agencies. We're also seeing the emergence of sovereign corporations. Take OpenAI structure, for example, where public shareholders might have zero voting power. That introduces what you'd call a governance discount that every single investor has to weigh very carefully.
So given this really complex landscape, how should an investor even begin to approach this asset-heavy world? What's the playbook?
Well, the first strategy is to invest in the picks and shovels. You want to focus on the underlying infrastructure players, companies like Databricks, and the essential physical commodities like copper and uranium that are absolutely required for this build-out. Second, you can play the consumer wave from that OBBBA stimulus. You might position in fintech leaders like Stripe to capture that inevitable surge in transaction volume that's going to come from that $150 billion liquidity injection.
Look, the 2026 market is going to reward those who understand that hardware and energy are the new software. The great frontier reopening is here, and this transition is going to be volatile. All of this brings us to the ultimate question about this new era of asset-heavy ambition. Is orbital compute the inevitable future, or is it, just maybe, a bridge too far?